Hi, today is the 24th of June and we are again here with a midweek analysis of the Nifty. The last time we had looked at the Nifty, it was on the 21st of June and it was right here. And at that time, our analysis showed three possibilities. One possibility was a turn down right on the next trading day from here, so that this is a so that would have thought that this is the end of wave Y. The second possibility we said was that this will continue to advance further into the 10,500 range, fill this gap, and then turn down. And that would be the end of wave Y. And the third possibility at that time was a continued very bullish advance with increasing volume and increasing momentum, and that would turn all this count into 1-2-1-2 count for a bullish resolution to the upside. So all these three were on the table, number one. Number two, we had said that we were ready with a trade plan accordingly about what was going to happen on each of these three scenarios. And then we were long as on the opening on Monday, and we continue to be long till today. So let us see what happened today. So the Nifty continued to go up pretty nicely, and then it turned down today with a lot of uh, selling to the downside. So now let us see this on the daily chart. So here we can see that the Nifty exactly retraced 61.8% of the whole fall at today's open and then started to come down. And that is a fantastic retracement for a B wave. So we are postulating that this is the A wave down and this is the B wave up and the C wave down is starting. So where do we confirm that the C wave is starting? So we have this trend line, which is our guide. And we'd want to see this trend line broken somewhere around 98, 90 or so before confirming that this whole structure was indeed complete. Because as you see, it earlier also came and bounced from the trend line and went up. So we don't want to be whipsawed again on this move. So even though we are personally short on the Nifty and other stocks at today's close, to really increase the confidence in the trade, we need this trend line to give way at about 99, 9800 or 9900, wherever it comes. That is one. Now, some more cool things I like to share with you. If you were to count the number of bars in this wave W, you come up with a value, and that value is 23 bars. So it took 23 trading sessions to reach to this top. Then there was this correction. Now we have another uptrend, uprise here, and you have to count the number of bars in wave Y. How many bars do we have? We have 23 bars. Isn't that amazing? We have a copybook retracement. We have equal number of bars or equal number of time for W and Y. And then we have this reversal on the daily chart. Amazing. Then the other thing which is also very well uh, uh, researched is that you have major market turns on the four major turning points in the year. One is the spring equinox, and the spring equinox falls on March 21st. When did we bottom? We bottomed on March 23rd. Then there is a summer solstice, which is on June 21st, which was just 2 days back. And where do we top out? Just around the summer solstice. So that is another seasonal pattern. And we have seen that the Dow actually goes down after the summer solstice 74% of the time. It is not perfect, it's not 100%, but statistics tell us that 74% of the time the Dow goes down between the months of June to October. So let us also look at the mid cap index. Again, a severe fall and then there was this three-wave rise. And again, if you see the retracements, you will be amazed. 61.8% at today's high, and then it couldn't sustain and made a very bearish candle. Then if you also see this wave A, B, and C, we'll call this here. So in this wave A, B, and C, you will see that when you measure the distance of wave A, we find that wave A is almost equal to wave C. And obviously we know that the time spent in wave A has been the exact time which has been spent in wave C. So these are all the things which are lining up. What we just need is the confirmation. And for that, we need this trend line to give way. That is the first confirmation. This trend line should be broken to the downside. And the final confirmation would be this low taken out. Until then, we don't know. It can just come down, make another three-wave move and start another five-wave move to the upside. That is possible. But personally, we have sold all our long positions today, and we have completely into cash, and we are shorting the market with about 75% of our shorts already in the market. The stop loss very clear above today's high. Now remember, tomorrow is expiry, and they can do anything. They can be very volatile in the expiry, and we will ignore all the volatile moves of expiry uh, because our positions are going to be medium-term positions. And finally, this is a chart of the Bank Nifty. Bank Nifty just managed a flat kind of correction. And here again, you can see that this correction actually just made it to 38.2% retracement today before crashing to the downside. So Bank Nifty is certainly the weaker index, and our more activity or more positions in our portfolio on the short side should be in the financials rather than on the Nifty stocks. So that is how things have lined up today. And again, we wait for confirmation, but the lining up, the dates, the proportions, everything are just amazing. Just to remind, this is our disclaimer, and these are the contact details if you want to get in touch with us. So thank you. Bye bye. And let us see if today's date was actually turns out to be a very important date for the market in 2020. Bye bye.